the London session, most at times 2 p.m. can give you a buy before the continuation of that sell. Okay, that's to fill in the orders and order. I think with time, when you're studying deeper into price delivery, with respect to time, you'll be getting that details. But since we are trading London session, I think understanding that the market will open from 10 a.m., the overlap happens at 1 a.m. to 7 a.m. Your first scalp opportunity happens between 6 and 7. Your trading opportunity comes between 8 and 11, and you can now know that, okay, if you're trying to catch Asian high, Asian low, what time should you be looking at? I don't think that's any difficulty again, right? So let's go deeper again to the chart before we call it quits for now. So this move here, this is 10 a.m. Okay, now this is 1 a.m. That's the overlap. So when you see 10 a.m., 10 p.m. move, you discover that the move is very slow. But when the overlap comes, that's when the Sydney and the Tokyo is open, you see the overlap move, right? It begins to make more sense. So this is the overlap moves. Now, I said that it ends between 1 a.m. and 7 a.m., right? So you now have 7 a.m. So this is 7 a.m. closure here. And then now the remaining move is London session trying to open, looking for liquidity to clear. Once it has cleared the liquidity that is available where? Below the Asian range, what happened? It now went into its intended direction. So let's try to go deeper into how we can trade using this concept of Asian range on this particular day. So what happened on this day is that we need to first of all check structure. So the first thing you do before trading your Asian this thing is to understand the structure. So where am I currently in the market and where am I going to? So look at this. The market sold down the previous day and then tapped into a higher time frame POI. Now, if you go to H4, you should be able to see this POI available somewhere at this region. Okay, this POI available somewhere at this region. My screen is quite small, so it's not quite clear. So just manage. So this is the POI. The market had tapped into a higher time frame POI. Now, after tapping into this higher time frame POI, it spiked back up. Okay, this is 2 p.m. reversal like that I told you before. It spiked back up and then closing at this level. Now, we had our Asian range. So this Asian range was created between what time? It was created between 1 a.m. This is the high of the Asian session. And where is the low of the Asian session? The low of the session now is at this level. Okay. Now, those are two potential areas of liquidity that the market has to target. The next thing you need to check now is since the market has tapped into my higher time frame POI, did it give me a change of character? If yes, to which direction? Where am I going to? So since this POI here was on H4, you already know that H4 demand is a strong demand. So all of these levels of supply here might become potential liquidity areas for the market to target. Not forgetting, we had a major area of supply we're looking at up here. So on H4, this could just be a swing low before a swing high. Okay. Now let me delete all of these other things that we did within um yesterday or within earlier on. Okay, so explain what we are talking about now. Okay, so the first thing I said is we are looking at structure. So already we can see that this is the Asian high, this is the Asian low. Now the market has tapped into an H4 demand and has caused what? It caused it caused a change of structure. So if you look at this, if you go to H4, let's go to H4 directly so that we can have this cleared out. Okay. If you look at H4, this is when the market tapped into that POI, this level down here. This is that POI down here the market tapped into, and then we had it trade above. So this is that change that I was talking about. So this change is not quite visible on H4. So let's check on H1. Okay. So what we are trying to do now is to understand the structure. Okay. Is to understand the structure of the market. So this change happened on 1 hour time frame. Okay, so this is 1 hour time frame change of character. So let me put it here. Change of character. Can we see that? Can we see this? I hope we are following. I hope I'm not confusing people with too much drawing.
We're
I
following.
hope I'm not. So this is H4 tap into the zone. This is H1 change of character. Now, what do you notice here? You notice here that after H4 tap into the zone, what did it create? It created what? and OB. We created an order block here. Now, Asian session has given us Asian low. This is Asian low, which we know is potential liquidity for the market to grab. Where is Asian high? This is Asian high that we also know is potential liquidity for the market to grab. So what we need to understand is, where is the market heading to after tapping here? Of course, we know that it is heading back into this our H4 POI. So where is the liquidity? Okay, these are questions you ask. Where is the liquidity? Now, remember when we're studying this side, we said that there was liquidity line below this fair value gap. So first, this is the first liquidity, external range liquidity we are seeing. Okay, so this is the external range liquidity we are seeing on this trend line, right? So this becomes our external range liquidity. So now where is the internal range liquidity? The internal range liquidity is this one below. So if the market has to come back up, it will need to clear the liquidity below before going above. Now, this is the other block, and then we have a fair value gap above the other block. So where is our fair value gap? Here is our fair value gap. Now, the market came down, tapped into that fair value gap, and did not come to the other block. But when it tapped into the fair value gap, what did we see? We saw that it had done what? It had taken out the liquidity that was available on the Asian low, right?
Clear.
Good. So the target now is the external range liquidity that is available here before the market will tap into our higher time frame POI. So what you will now want to do is to maybe break down to the 3-minute time frame or even the 5-minute, trying to look for your entry confirmation in that POI you are studying. In that POI you're studying. So let's get there. Oh, 3 minutes is not having enough bars. Yeah, let's see 5 minutes then. Okay. 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 So as soon as the market tapped into your POI, what do you see at this level? Remember now that you're trying to get your entry ticket, okay? But it's shown that there was a news event during this period. Let me see. This is 1:30 p.m. candle. This is 1:30 p.m. candle. But that's to tell you that most times fundamental analysis comes and fast forward what will happen technically. Most at times we're analyzing technically, and now we notice that there was a fundamental around this area. But irrespective of that fact, the market had already tapped into this area. So after seeing series of what, lower highs and lower lows, the market now gave that change where we now saw a lower high, they call it what, a higher low created, and then now we had a pullback into the POI before the move. So this should have been your trade if you followed that Asian concept, or the concept of the Asian low, Asian high, and all that. With a stop loss of about 15 pips below the price that tapped into your fair value gap, and then targeting all the liquidity available above your Asian range, and then your external POI, which was the H4 point of interest. Did the market finally get there? Let's find out. Ahead. He finally got there, but I think not now, not immediately. He finally did. So that is it. He finally got there. But we're just trying to study Asian range. So that's the first understanding of it. So let me draw the Asian range pattern that you look out for. Okay. I think I had done this before. Asian range pattern that you look out for. Okay. You can have the market creating swing high, swing low. But if you now have something like this, okay, if you now have something like this in the middle, you already know that what is the IF of the market? The IF of the market is bullish. So the market will have to clear liquidity and then do what? Continue high. So this pattern is what we just studied right now. Okay. This pattern is what we just studied now. The reverse of this pattern now would be what? It would be something like this. Swing high, swing low, engineering of liquidity. Euro USD is also fond of doing this. Okay. Engineering of liquidity touched into fair value gap or this thing and then sell down. So you have your liquidity here, you have your liquidity above it, you have your point of interest here because of the IF, okay, and then you have your external range liquidity targeting below. The same thing available here. So this is what Asian range will do. But the difficulty now comes with the fact that most of this Asian range, there are times that the liquidity the liquidity engineering is in a way that is difficult to understand. Like you can have liquidity engineering in the form of a trend, Okay, now you have to understand different types of liquidity. This is liquidity engineering in form of a trend. We call it a trend line phantom. You have liquidity engineer like that. Okay, then you also have liquidity. You have to understand the different forms. What are the different forms that liquidity can take? You can have liquidity engineered in the form of a double bottom. You can have liquidity engineered in the form of a double top, double top. You can have liquidity engineered in the form of a failure swing. Okay, this is one of the highest trap that most of us face, because most of the times we will see this failure swing and then we get to trade it as an OB. Well, but even if you trade this as an OB and then you get taken out at this level, what you do is simply to identify the next level above and then sell from it. I think this happened with USD CHF. The last trade I sent before I traveled out of the country, we had something like this. I identified an area of interest for CHF. It took out the supply, now tapped into a higher supply and then sold massively. I think one of us here caught that trade with me. Okay, so these are the different forms of liquidity that the market might take during the ASEAN range before doing what it has to do. Okay, so what happened here? So let's try to catch one more example before we close. Okay, okay. So we had this higher time frame point of interest available down here, right? This is an order block here, right? This is an order block down here.
Can we
Let's
just
go back to
go?
support.
Can we just go ahead and look at what is happening today?
Okay, let's
Yes.
let's let's go to what is happening today then. Okay, so for today, we've had the market tap into a higher time frame POI. So I took, let me remove all drawings and then let's reanalyze. Let me remove all drawings, please. Okay, let's reanalyze from scratch. Okay, so this is the weekly view on GU. First, we have this structure we are looking at, and then we have this last buy to sell candle area we are looking at here. So already this is what GU is telling us on the weekly. Okay, so we know that weekly is still bullish. If the market gets into into this OB here, we should be expecting a massive push to the upside on the weekly, but for now it's selling. So let's go to daily. Daily, what is happening on the daily is we have daily structure forming. We have a break of structure here. We have an other block below it. So we have this other block available here. So from the look of things, the market has currently tapped into that particular other block. We have this other block of structure here. And then we have, I think that's basically it. Below it, we've had liquidity engineered. I think we've all shared this already. This liquidity engineered. The market has tapped into it already. So the market has tapped into a daily POI. Okay. Now we know that if this other block here failed, the market might be coming down into what? Into the weekly OB, right? Okay.
Yes.
So the market might be coming down into the weekly OB. So this is our area of interest. So for today, since we are day traders, we have to study what's happening here today. The market has tapped here. Let's look for if we will see anything reasonable on H4. Now, H4 is showing us that we've had still the tapping into the OB. Not much information, but one candle here has closed bullish. We go to H1. H1 is showing us that had um we had a tap as well. We had a tap as well. We had they call this what, bullish engulfing. This is the bullish presence in the market. We had this is, we go down to 15-minute markets, 15-minute time frame. 15-minute time frame, what can we see? Well, earlier on 10 a.m. Let's try to see if we can look at ASEAN range here. This is the ASEAN high. The market opened here at 10. Say, so this is, we know that this is liquidity present here. Okay, so this is 1 a.m. 2:30 3, and then down here 5 a.m. Okay, so the market tapped in here at 5 a.m. So we know that the liquidity is available where above here. Why? Because um we were plummeting down at this level, and every lower low was being invalidated structure wise. Okay, structure wise. So this is the last 5 a.m. tap into a POI. Now, what I want us to notice here is that this, in as much as this is 5 a.m., okay, in as much as this is 5 a.m., we might not be expecting a continual push unless otherwise, like I said, the market is going to where our weekly point of interest, right? Or maybe the market want to mitigate the other block completely, but we've already had a tap into um that higher time frame POI. So what we want to do is to look at structure now. Okay, so let's look at structure. So 5 minutes is telling us that after we tap here, after creating lower highs and lower lows, we had what? We had a change of character. The change of character was caused by what? It was caused by uh last buy to sell candle demand at this level. So now, if you're buying here, you know that if your stop loss is taken, you will still be looking for more structural shifts before you buy. Because even if you're buying here, note that this is 5 minute time frame. You should be targeting the 15-minute supply. Okay, 15-minute supply is which one? This is the 15-minute supply, right? So I think even by now, if you were in this market, you should be out. This is the 15-minute supply here, because this supply can still hold prices down for it to go down again lower before the actual buy. So the only time you might want to hold a buy longer is if that change of character that occurred is something like H4. Are we together?
Yeah, following. So definitely
Yes.
this market respecting this buy has just obeyed but the other block, because looking at it, the low of the Asian has not yet been taken out.
Yes, yes, yes. That's the only thing it respected here. It respected but the other block of the daily time frame. That's the only, there's no true explanation to this thing here. No true explanation. It just respected but that other block, because you see that even when the market was selling back down into the other block, it almost took it out. Let me shift this thing down. You see,
Yeah,
it
it
almost
almost
took
was
that OB
that
out.
exactly. So that's what I was looking at, like what actually happened there before seeing the other block.
Yeah. Now, the only reason this did not take it out, like we just said now, is because this POI here is another block from the daily time frame. And that's why I'm saying that when you're trading Asian range, you must combine it with market structure. If not, it will not be profitable for you. Now, what type of liquidity was engineered here? Because that's the first thing I always look at when I'm trying to understand or study my Asian range. The type of liquidity that was engineered here is a trend line liquidity. Okay, this is the liquidity that was engineered here before the market is plummeting up. So this buy here is only reasonable because the Asian, because of that daily order block. Outside of that daily order block, this thing is not, it's not worth taking it, and it should even be a scalp trade. It should be a scalp trade until you see that maybe H4 is taken before you can hold the trade for long. But if this market now takes out this high, this is a 15-minute high, right? This is a 15-minute high. So if this high is taken, that means you should already have a change of character on the 15-minute, or if it's 30-minute, whatever it might be. Okay, 15 or 30-minute change of character should occur if this high is taken out. Uh, change. Okay, so that's what we are expecting. If that occurs, then we'll start looking for the next OB. But I doubt it's going to occur. For me, I think G will still sell down before we have the buy. Okay. For me, I think G might still sell down before we have the buy. Why? The pressure here is not strong enough. The buying pressure here is choppy, is not strong enough to hold the market high. You see it, both sellers and buyers are battling. That means even if you were holding this trade in a position, you'd have held the trade for about how many hours? Close to 4 hours if you took the trade at what time?
Yeah, it's close to
If you took
four
the
hours
trade.
because it started happening from
Ehen.
7.
Yes. So it would have been a very emotional.
And a boring.
damaged. Yeah, and a boring setup to hold. So the best thing to have done at this particular point in time is just to wait, unless you want to be in that kind of a saga or you want to just put some risky position and then allow it and go and be doing something. But unless this high is taken out, we shouldn't really be looking for anything here. And even if it is taken out, you know that even if you're taking another buy here, it should be a scalp. But I know that this thing has to sell further. Okay, it has to sell further. So this is 1 hour now. If 1 hour is taken out here, you know that the Asian high has been taken, right? This is Asian high. It has been taken. Then you might try to look for a sell opportunity to target the low because you know the low has not been taken, right?
Yeah, definitely
So you
is
might,
wise enough to look for selling opportunities. So
yes, it's better off looking for selling opportunities in this market than buying, unless otherwise. But the buying pressure, like we are all seeing, is not strong enough. It's not strong enough, and thus we have to look for selling instead. But looking for selling at this zone also is dangerous. So you have to know that you're risking small because remember that this is a daily time frame. They call it what? Order block. But the IF is still very bearish. Okay. So you are selling at an order block. So the order block might signify the end of the trend, or it could just be a form of liquidity. But like I said, I'm seeing it as GU might continue to sell down before buying up. Why? One of my reasons is because I see this level here as liquidity. Okay. For me, this looks like liquidity. So the market might come right down to this level. So best thing to do now is for me, let me just show you guys what I think for GU now. This breaker block here, I think we know what a breaker block is, right? This level here is an important level to look at. uh It's almost the same thing I was trying to point out. So at this level here, let me bring it now in front. We might see GU selling from that level. Okay, you might just see GU selling from here.
and take note, we
But
still have another level up.
uh the only way GU, it might be difficult, it might be difficult for GU to break this level, but it's possible. If it's gold, I know that gold can have the strength to kind
To
of fly and break that level
yeah,
because it's a very strong level. Why is it a strong level? It has been rejected. Look at how many times this level has been rejected in the market. One, two, three, four. This is a fifth time before it finally broke.
yeah, it's a
Okay.
strong level.
Yeah, it's a strong level for the market to just break it. So I think the market might respect this at this level and then continue down.
Okay, somebody
Okay.
is asking the breaker block, so maybe you explain.
Oh, okay. Okay.
If it is okay,
Okay.
this what's a breaker block? Is it same as flip zones?
That is the same as
Flip zones
flip. It's almost the same, but not
is not the
exactly the
same.
same.
It's not exact.
Okay, it's not exactly the same. Okay, I will just do a textbook explanation of what a breaker block is. But breaker block is very important. And that's this concept you are seeing me using here is a breaker block concept. That's why I said that this might not go high. This might not go high. Okay, a flip is different. It's completely different, my dear. It's completely different. But it happens. Oh, I'm having battery low issues now. It happens almost at the same point. If you have structure of the market like this, if you have structure like this, okay, going up, and then this this feeling, okay, and then you have something like this. Yeah, this is what we call a breaker block. Okay, But now there is also what you will now call a failure swing, which is I think is what you're referring to as the flip. Okay. I think it's what you're referring to as the flip. Okay, where you now have this change your character, pull back. uh this is it. So at this level now, what you will now call this is a flip. That means it's changing from an uptrend into a downtrend. It's changing from an uptrend to a downtrend. So this other one here is a breaker block. And most at times, if you don't understand how to trade breaker blocks, you will always miss out on your setups. Why? Because you'll be expecting the market to come back into where this happened.
Yeah, you'll be waiting for
But
the
at this,
support zone.
and it will not come. It will instead respect the other one down. But one thing that you always notice with breaker blocks is around this level where we had the break, the selling pressure is always very strong. If it is a sell, if it is a buy around level that level where you have that break, the buying pressure is also very strong. That most at times it has an imbalance or it has an order block present there. I will show you that shortly. I'll show you that shortly. Let me show you that on a live chat now. Okay. So look at this level here. We could see that this level here was taken out. So normally what you'll be expecting is okay, market come back to this other block now. But the market did not come back. It just respected this fair value gap. So at this level here, the selling pressure here was very strong. So if you should look at this from maybe 1 hour, I'm sure you'll be able to see the structural implication of what happened then. So you look at the structure. Okay. Look at the structure at this level. You have change of character, you have break of structure, you have break of structure at this level, and then the final break of structure up. Okay. Where is that break of structure again? You have break of structure at this area. If you go down to the 15-minute time frame, you should see it more visibly. And then we have it at this level. But now, look at this. This is the last other block that you have here. But look at how the market ran through it. It ran through it with a lot of speed. So this other block now becomes what is holding the market now from going above. If the market is to come back up to this level, that means it will need another kind of strength or power to do that. Let me look for another one which is even much more cleaner. That one is really not sharp enough. But a breaker block is basically what you see me draw. So you can take that textbook picture there, and then you try to look for it on the chat. I'm sure you should be able to see it, and then you can always send your chat to your mentor so that she can help you with that. I think when you're training on price cycles, right? When you're training on price cycles, you would always see that concept. Price cycles of rally based drop, drop based rally, and all that. So there is an order block, there is a mitigation block. So there is a difference between an order block and a mitigation block. And most at times people ask the question that is a mitigation block the same as a breaker block? So what is the textbook definition of a breaker block? A breaker block is an order block which failed to hold. That's why I said look at this textbook drawing. That person was asking if you're there, you can look at this. So this is an order block at this level that pushed the market to where to take out structure, right? So this order block failed to hold. So an order block is a breaker block is an order block which failed to hold prices. So it failed, and then now the market just came and then respected it. So When the market comes into that level, you should be looking for sell. In retail trading is what we call support becomes resistance, or resistance becomes support.
Yeah, that's what I just wanted to say. Support
Mm.
becomes resistance.
And resistance becomes support. So it's very common. You always see this on higher time frames. If you go to higher time frames like daily or H4, you rarely see the market break a demand level and then come back there. It can even take 1 year or 2 years for the market to come back there if you are analyzing maybe from this thing, higher time frames. Okay, so that is an order block. Now, what is a mitigation block? A mitigation block are simply zones that are left by price behind without filling them. So there's a difference between an order block and a mitigation block. So a mitigation block now is what we call a failure swing. Okay. So this one that I just drew here, you always see traders when they analyze their chart, they'll say mitigated supply or mitigated supply. So those are zones that were left behind by price and field, because the character of the market is always to fill prices and all that. So you notice that this becomes mitigation. So at this particular level now, you'll be selling now from here, from this level down. Okay, you'll be selling from here now. So this is what you call a mitigation block. This is a mitigation block. This is a breaker block. The person was asking, I don't know if that has answered the person's questions. If you have a question, just ask. My laptop is soon going off and we don't have lights here. So just ask so that we can round up.
Um, Unmute yourself and speak, please, Larissa.
Any questions, please? There are no questions. We can end for today. My laptop is low. So what we should be expecting on Geo, like uh, like we've explained already, is to see that the market gives you a valid structure for you to trade from. Because this whole place here is a daily order block. Okay, this whole move here is a daily order block. So if you're taking a buy here, know that it's a scalp, but look for a sell around this breaker block here. Around this breaker block here. In trend line, retail traders will just draw the line like this. Then they'll just wait for the market to, when the market reaches this level, they just sell at once. And then their stop loss will go above the OB. And then now they'll target lower. So that's how they'll draw their listing. But for us, we always like to see structural movements around that level. So you can go down to 15 minutes or whatever time frame after drawing that type of line. But I don't like that type of line because it makes your chart crowded. You already know what a breaker block is, so you just need to draw it from here into here. And then wait for the market to come here and see if you will see that structural change here. Which pair? There's one pair that did this yesterday. Which pair was I studying that again from? Is it GBP cat? Let me just show you. I think that it did that yesterday and then it just moved. This is the last thing I can show you, and then we can just close it. Uh-huh. Watch this here. I don't know if it's quite clear enough. So what can you see here? You see here that if you are waiting for, this is the last OB here. See what happened. If you are waiting for this market at this other block here, you will never get in. Okay, you will never get in. So it just breaks through this level and then comes back there and then respects it. I think that's clear, right?
It's very much clear.
Oh yeah, now
Please, we ask,
we can
once
call it
you
a day.
unmute yourself and ask your questions because it's already running up. 1 minute, no questions. We are done for the day.
We're done for the day. Let's see how this market will play around that level. Even JVP card is at a very sensitive area. Yeah, let's go back to your equals G. Yep, this is basically what we are expecting here.
Okay, maybe just mark that zone and send in the group.
Let me mark it from your time frame. I wanted to do in such a way that this higher time frame POI will be showing. Anyway, so we should see. Okay, I think we are done.
All right. Thank you very much for today's session.
If you have more time, if you have more time, you can schedule this Asian range, and then we can share more ideas on it as we are trading ongoing.
Okay, no
I think it
problem.
will help a lot
Mm-hmm.
because with this